All right, good morning. Tuesday, May 5th. Markets rallying. Tech is making a new all-time high. S&P 500 is right here near the all-time high. We got a big gap up. We're up 0.88% on SPY while we're up 1.4% on the NASDAQ. Just demonstrating that technological dominance that the market is running on right now. Frivolous investments, frivolous spending on the new data center build out, and with AI technology, it's all coming together. The great flippening is happening. I just posted about how the NASDAQ is going to surpass the S&P by price very soon in the next few months. By the end of the year, it's guaranteed. As of now, the NASDAQ QQQ, let's see, can I pull it up right here? I don't know. The NASDAQ clearly is at a new high, where the S&P is still right around this area. The NASDAQ gapped into a new high. Price is 682. While the SPY is at 724, it's becoming clear how they're going to flip very soon. And that is a good thing for everyone, especially people who invest in the future, people who invest in technology, more specifically. When we look at Bitcoin here, it's finally breaking out of this downward retest of previous all-time highs from back in 21 and support level of 24. This orange line denotes that area. We got a perfect bounce off, and that's just the perfect spot. We're making a new higher high. As you can tell, if you look at Bitcoin on this larger time frame on a 3-day chart, going back to 2020, it looks as though we're heading for possibly what could be another leg going higher as Bitcoin becomes more standardized. And the Clarity Act, the Crypto Clarity Act, which I haven't really looked too much into, is supposed to be passed here very soon in the next month or two. That's going to drive this price back up towards 100K easily, just with bullish optimism and exuberance in terms of blockchain decentralization integration into our financial systems, and with the opportunity that it presents for investors and everyone else who's been following the story of Bitcoin for the past 10-15 years, since it was basically worthless. Bitcoin is very important because decentralization marks a very important aspect of the financial markets. Decentralization is a way for truth to be apparent and obvious, and transparency to be clear and evident for all to see and for none to argue. The blockchain has this feature, and so decentralization of information, and financial information more specifically, is going to be the future. And that's what blockchain decentralization, Bitcoin, Ethereum, and Solana foundations are basically built on and moving towards. So anyway, I do like this chart on Bitcoin, looking good. I've been accumulating it, and yeah, I think Bitcoin's going to be back at 100K pretty soon after that Clarity Act is passed. I have to look into that. I don't even know the details of it, but just looking at the market today, been really busy, so I don't know. I was even considering getting on today, but I just want to be consistent, and even though the market's rallying and the S&P 500 is making a new high, look at that silver chart. It's getting really tight there, wedging gold and silver. What a move. But let's just look at the technology chart. Absolutely insane. It looks very similar, but the momentum on technology is astounding. And funny enough, I mean, the NASDAQ futures trading at 28,000. This is the big dog, and the ES is trading at 7,200. So the flippening is happening on the indices, not on futures, but it is definitely very important to note this flippening that's happening. This price will be higher than this price going into the end of the year in the next several months. And that's pretty much all I wanted to say about that. I think that's something to know. It's nothing really you could take action on. I mean, you could buy calls, you could buy leaps on it, but I mean, you should have been buying leaps on and calls. You should be going long on net technology 5 years ago, before ChatGPT came out. We were talking about Micron before ChatGPT came out, because memories and CPUs, Intel is it's not like GPUs and TPUs are gonna ruin CPUs and memory. They all have a part in the bigger picture of what the infrastructure of this technology is gonna require. So there's a S&P making a new high of the day, making a new all-time high at 724.97. There it is. I'm gonna have to look at these contract prices to see what they're looking like. 59 minutes, 48 minutes actually left in power hour. I'm still looking for an opportunity to take a trade. Each trade that I will take will be about $30 each based on my account size. My risk to reward is higher than it would be if I had a larger account. I'm risking about 20% ish per trade. given my trade size will be $30 during power hour, my risk and my stop loss would be at $10 or negative $20 on each contract, which is about 66.67%, which seems like a lot, but it gives me the opportunity to take 4 or 5 trades, maybe 6 now since I had a small profit on Friday, to capitalize on outsized return during a volatile time like power hour when contracts can present asymmetric returns. Contracts right now, 725 call and SPY is 46 cents, which isn't too bad considering we just made a new all-time high and we're 8 cents off of that strike. That's decent. Obviously the entry would have been nice if we could have gotten in earlier, but we've just been grinding higher all day, just barely breaking this previous all-time high from last Friday. That was last Friday. May 1st was Friday. That's interesting. But yeah, May 1st was Friday. Made a new all-time high on May 1st. May 5th, we're making another new all-time high on the SPY. And obviously, if the market did go through a correction or a downturn, which we could probably see on the chart, that the NASDAQ would also be more volatile and it would fall faster. But that also means that the volatility just allows it to recover just as fast and make a new high, which is what's happened since April. So the S&P 500 is pretty stable, more stabilized than the NASDAQ because it has more diversification, less concentration in the top 8 or 9 technology names, even though it is quite concentrated in that sense. Like 8% of the SPY is in the top Magnificent 7 or 8. And so the opportunity to trade QQQ and NASDAQ is pretty significant, and it does present more volatility and more opportunity. But I'm sticking to the SPY until my account reaches at least another comma or 2. And that's just the plan that I have to stick with for me to scale this account, for me to get to where I need to go, for me to actually turn trading into an income source, which is the goal. And I'm just looking to stay consistent, stay disciplined, and be willing to take the risk. No hesitation. Take all the notes and journal every trade that I make and assure myself that I'm moving in the direction of profitability. And at the end of the day, what I've been realizing is that trading is not about profitability at all. Trading is actually about probability. To be specific, probability is all that matters. As long as you have probabilities on your side through discernment of the market and the world and the candlesticks and the momentum, the grace that it presents is the opportunity to capitalize and profit. It's just a side effect of being consistently probabilistic and having probabilities on your side. So trying to short an all-time high is not probable. Trying to go long at resistance is not probable. Taking a lot of trades is not probable. You want to simplify your trading. You want to simplify everything you do less, and you will gain more. But the things that you do should be very important and should require you to think about it. You can't just randomly act. You have to think about what you do. You have to present yourself in a way that allows you to learn from your mistakes. And so this is something that I've been working on with myself for a while now. And I'm no longer willing to take a max loss. I'm no longer willing to blow my account in some sense. It may happen. It's no guarantee that it doesn't happen. I've already done it a couple times here on these live streams. And I've reset my account twice now. But I've already done 150% in 30 days, and then I reset it. Now I'm at a 78% so far on the second go, third go, whatever. So it's just a matter of continuing to be consistent and allowing the probabilities to be on your side, and that will allow you to eventually become profitable. Profitability has nothing to do with trading. Trading has everything to do with probability. So remember that. That's all that matters. That's the only thing to think about. And the other thing alongside that, profitability and probability, is the whole dollars and percentages thing. Dollars don't matter. Someone who makes 5% on a $10,000 account made $500, but someone who makes 5% on a $100 account, it's only $5. So that may make you feel some type of way, especially when you're trading a $100 account and you only see $5 return. That makes you feel like it's pointless, like it doesn't mean anything. But if you look at the percentages and you understand that percentages rule everything, the law of large numbers, the law of percentages, I would call it, states that only focusing on percentages, the percentage mindset, allows you to see growth in a different perspective and to develop yourself and your abilities outside of your necessities, like paying rent, how much things cost. You know, $5 doesn't mean much to most people. $50 doesn't, even $500 for many. But 10%, 20% consistently over time, demonstrated, is more valuable than any dollar amount. You can have $1 million and you could lose it tomorrow, but you could have $10,000 and you could turn that into $1 million in a year or two. That's the difference between someone who only cares about money, dollars, versus someone who cares about the percentage and cares about what matters. The geometry, the calculus, the logarithmic scale of compounding capital. It's an exponential curve, and you can't get to the exponential curve without doing the hard work first and going through that hard part. Really learning from failing, learning from mistakes, and avoiding making iterations consistently, going up every single day with no hesitation, and allowing the market to tell you what it's saying, and not just reading what the candles say, but allowing the market to present opportunities. When they present themselves, you take it, and when they fail, you accept it. When it works, you continue forward with no celebration and no hesitation, but to allow the profit to work for itself, or to secure it if you feel some type of way. But the plan is to allow exceptional trades to be exceptional. Like I said into my $50 doctrine, I posted a video about it, just me reading it basically. I had to redo it because I did it on the stream and it wasn't very great. I had to fix it again. So hopefully that's cool. Hopefully that's useful for you. For me, it's good. For me, it's just a reminder, and it's something I will go through. And there's a couple things, other papers and statements and things that I want to repeat every single day, really. So tomorrow, I'm gonna pull up the 10 rules that I have, which is on my Twitter. It's posted, it's pinned on my page. It's all there. 10 rules before you take a trade, something like that. I'm gonna bring that up, and I'm just gonna read through it once every single day, at least for the next several days, and just really affirm that, because it's important. And right now we're in an interesting time with the market. We're in a great boom. It's great, but there are some issues. There's a lot of questions. There's a lot of potentialities that could be negative, but any negative potentiality is nothing but an opportunity. And that's what you have to understand. Nothing's going to change. Nothing's going to go away. Everything's going to become bigger, better, greater. And if you miss out, that's your choice. That's your fault. So for me, I'm prepared and I'm willing, I'm ready to take advantage of the knowledge and the information that I've accumulated. And I just want to become profitable so that I can eventually buy my time back, because I have a lot of things to do. I have a life mission to do. I have life's work to do. And I can't necessarily get it done effectively and efficiently when I have to go to work for 8 or 10 hours a day doing things that I totally don't like doing and totally just like screw me up. And that's what I've been dealing with for 5, 6, 7, 10 years. But for the past 6 years of following the market, trading, investing, being on the screen every single day, going through a lot, mostly learning a lot of lessons, I'm ready to take it to the next level and actually pull a profit. For the first time, I'm going to be pulling a profit, and I'm going to withdraw from my account to my bank account, and I'm going to purchase TradingView first of all. and get the journal TradingView when my account reaches the ability to do that. I have taxes that I owe from the past 2 years because I screwed up with my withholdings at my job. That's a long story, but long story short, I need to make that money from trading because it's not going to come from my 9 to 5. It's just not. I can try to save up a couple $100, but I'm building a couple different companies, I'm building a couple businesses, and I'm trading for income. Trading is a very small part of everything I do. This is just me having fun, me doing something that I continue to do. And this is like a hobby. I have plenty of hobbies, but this is a hobby that is more so based on my career, and it's aligned with the things that I care about, which is finance, economics, and the overall order or disorders of the world, which present themselves as volatility on the chart on the screen. So anyways, just looking for an opportunity here. These 725 calls are still at 42, 43 cents. It looks pretty bullish, but the trade that would present itself would probably come in the last 30 minutes, which is in 7 minutes from now. We'll be looking for, I mean, just based on this, you know, we just have an uptrend into the all-time highs, and we have QQQ also at all-time highs with really no hesitation. Just gaps up, and we're just rallying into undiscovered territory. So this is price discovery generally on these two indices. And there's really not much of a trade setup in my opinion. It's more of just a trend. So if the trend continues, or if we get a reversal into the end of the day, then just similar to Friday, could capitalize on that, or whatever it might be, or take a stop loss. Either way, if I even take a trade, but we'll see. It all depends here if a setup does present itself or start to develop, or if we can just get that momentum that allows me to take the late entry, take an early exit, and call it a day. Kind of how I did on Friday. Even though I wasn't expecting to go short Friday, but then the market presented an opportunity to slightly break the trend in the 9 and 21 and the VWAP all at once in the last 10 minutes, and so we took it. And the trade did 100%. I only got like 20-30% out of it because it happened into the after hours, so it was weird, but still made $9 on Friday. So the account's up to $111.29. $7.25 break on SPY. That contract's in the money, so it's going to be really hard to get at this point if it holds. Contract's already, well, it's at 46. As we move forward here above 725, this contract's going to become more unattainable for my price range. So that presents a bit of a difficulty for my what would be an entry. But there's not too much momentum. We're just barely creeping at that all-time high at 725. Not really too much here. So we'll see. Yeah, it's pretty crazy that the Intel stock is up well over $100 now. It's at $107. Market cap's at 542 billion on Intel, and I wanted to see the Palantir market cap. Okay, I was thinking yesterday after the earnings from Palantir that they were good earnings. They're up 70% year over year, whatever it is. They're presenting huge numbers, and I think everybody should really go look at Palantir's last earnings report from yesterday or the day before and really read into it, look at their statement. It's really important. It's really impactful. I really think you should look at it. I was thinking though, without remembering the market cap specifically, I was thinking yesterday that I'm not really interested in Palantir. Like, it's hard to say I'm interested in going long Palantir. I don't own it. I've never owned Palantir stock, actually. I think that I was thinking, I don't know what its PE was at, but the PE going up to 200x earnings, 200 times earnings on something like Palantir seems so incredibly dystopian or like, so extravagant. It's so high. 200x earnings on a company like Palantir doesn't seem quite right. I mean, it's a technology company, it's a defense company, it's an intelligence company, it's an integration company, it's an engineering company, and it encapsulates the whole AI trade, the whole AI build out infrastructure, and it's integrated within the government, it's integrated within institutions. It's not a joke. A lot of people think it's something else, but it really is a great company. It really is demonstrating American dominance, and it's asserting the revolution that we're developing, the technological revolution. This is the second time, in my opinion, and I am doing a piece on this separately entirely. This is the whole thing. But I think it's huge. And I was thinking the main point is that with the 200x earnings, 200x PE just seems so unreasonable to think about how getting a return long term makes sense unless your horizon is 10, 20, 30 years. They're talking about, the earnings catching up to it, the price being overvalued, or the price being overextended while the value being undervalued. That's what they're saying, and it could seem that way. And I was just thinking that if Palantir was at $1 trillion or above 500 billion, the market cap, with that PE ratio, I could just not invest into it. And I just can't see myself taking that risk over something else, like even something simplistic like SoFi or Iran or Nebius, all these other AI or financial institutions or hyperscalers that, in my opinion, could present a 50, 100% return in a year or two. When looking at Palantir at 200x earnings with a $325 billion market cap, for it to do that, to push back to 200, 150, 200, even 300, seems unreasonable, because the big moves right now are having to do with memory and having to do with the shortage of chips and supply. Palantir, not necessarily, they're more of a software company. But given that their market cap isn't 500 billion, I was just thinking that if the market cap was above 500 billion, nearing $1 trillion, I just don't see an investment. But realizing now that the market cap's only 325 billion, I'm a little bit more favorable towards investing in Palantir, even at this high price. I don't know how accurate this on Webull. It says the PE ratio is 119. That can't be right, but I'll have to look it up. But it's something like 200, but that's obviously going to decrease. But just think about it. For example, if Palantir's at a 200x earnings, then it's going to take a 2,000% increase in earnings to balance that out. And obviously it never needs to be a zero. It would likely be 40, 50, 60x earnings would make a lot of sense in 5 years. But that means that they need to do 1,000% on their revenue and their earnings per share over the next couple of years. And that could happen, but that seems absolutely insane. I don't know if there's a precedent for that, if that's happened many times before. I don't exactly know. Maybe I should look into it. But I think Palantir is interesting, given their earnings and everything. The company is interesting. And it seems like long-term, it will be a great investment. I think long-term, it could be huge. And there's a lot of other reasons that I'm not going to get into, because can be kind of negative, talking about the potential that Palantir would dominate and would be significant. And Palantir, in terms of wartime, not peacetime, would demonstrate and would fulfill its prophecy in some sense that the market would value it at a different level. And I'm not saying that that's what will happen, but that's the hesitation, that's the question that I would have. That's my little bit of a qualm in terms of their alignment with the people, the integrity and the freedom in the decision making of the government and the institutions and foreign adversaries as well, and all of them combined, creating some sort of weird assortment of potentials that half of them aren't so great. And just because they aren't great doesn't mean that wouldn't be great for the stock. That's what I'm saying. Is it would be huge, it would be great for the stock. And that's not a good thing for most people, in the sense that we would enter wartime. Talk about a World War III, talk about using these technologies, improving our capabilities. This is something that could happen. It's just speculation, but given the stock and everything about it, it's an interesting point to think that, and like to think, I would hope not. We don't have to go through that. We don't have to assert it. We don't have to force that to happen. Instead, we can just continue developing, because there's many better things to worry about. There's bigger technological hurdles to overcome, and there's bigger, better compounding returns that our people can gain from economics and not politics, and not from war, not from conflicts, not from associating with people we don't agree with generally. So there is a lot that I would have to say about Palantir. I like the stock, I like the company. I think Alex Karp is great. I want to look deeper into it. I recommend you read their previous earnings call, the one that just came out. Look at the statement, read everything that Alex Karp said and he wrote down for shareholders. Everyone should read that. It should be standard. If anything, I might go take it, screenshot it, and post it on my account so that other people can see it, but because it's important and I think it's huge. But that's just me. I just had that observation about Palantir, and I think it's very interesting. Palantir's down 7% today after the earnings, but the strong quarterly revenue growth was pretty huge. They raised their forecast by a few percent again. And yeah, so that's Palantir. So back to the SPY. Yeah, where's Palantir? Let me pull it up really quick over here. Yeah, so that's the stock after earnings. It's down a little bit. Just an absolute beat, just consistent. And where's the market cap? It doesn't show it here. Yeah, I don't know. Yeah, this is if you look at this though, 2026 compared to the past 2 years is the first year that it's really in a negative going into the first half, you know. So this is quite interesting. It's a little bit of a divergence from the previous 2 years just based on this little seasonal comparison. But the company's growing and scaling. It's one of the fastest scaling growing companies right now. It's pretty interesting though. I don't know why the market cap isn't present there, but yeah, that's weird. It doesn't really matter. It's 326 billion right now for Palantir. But that's the stock. You know, year to date, it's down a little bit, which is interesting. So just these yearly candles. It's a pretty simple setup. Really, 2020 at IPO was pretty insane. Still early. QQQ stagnating. SPY stagnating at the all-time high. All right, 20 minutes till the close. Let's see. Getting a sweep right here on the SPY, right off of the 9 EMA. Right off the 9 EMA here. Should probably put that there, but the 9 EMA's riding up. We haven't broke below the 9 EMA once today, not one singular time. We have not closed one candle below the 9 EMA today at all. Just purely riding the trend up through the 9 EMA. So that's why this is elevated above everything, because this is the 9 EMA perfectly holding in place. So that presents a decent risk to reward, in my opinion, for this last 20 minutes. If we break that 9 EMA at any level, it's just you know, pure stop out. There's no question. There's no reason to, like, it's just no question about it. But the contracts, for example, 725 call. Well, actually, you know what? It's down to 33 cents. I might consider taking the entry here soon then. Not too bad. I'm not gonna lie. It's pretty good. $20 minutes till close. 725 calls at actually about 30 cents here. 33 cents. Holding at the 9. Big hammer candle up to 21 on the 1 minute chart here. If it was 30 cents, I might enter it here just to take that risk. I'm willing to, but you know, that would be me expecting that we're going to cross that 725 with some certainty here going into the close, which seems likely at this point. The contract's down to almost 30 cents, which is pretty good, honestly. That's pretty much where I need it to be at this point. 725 call for SPY. It's 33 cents at the moment. If it touches 30 here, may enter, maybe, I don't know, let's see. Give it a couple minutes here. Give it a few minutes and we'll see. Maybe I'll take the entry. I'm not against it. Not against going long here in the final 20. Okay, we're testing that once again. 21, 9 EMA on the 5 minute chart. Well, I guess I was looking at the 15. The 15 minute chart is really holding that 9 EMA. That's what I'm really looking at. And that's the 15 minute chart is the key here. On the 5 minute chart, it's the 21, but either way, we have closed 1 or 2 candles during the day below or at the 21 on the 5 minute, but the 15 minute is perfectly clean and clear, absolutely no hesitation. It's super bullish. Contracts at 30. I'm gonna enter it right here just to take it. It's not ideal, but I'm not really, I just want to take the risk here on this one. I like the trend. Took a 725 call at 29 cents here. My risk is, like I said, stop out at 10 cents. And that would be obvious. The market's not going to break that 725, but if it does, and we can gain that momentum here, we're still holding that 9 on the 15. So as long as we do that, I think there's a high chance that in these last 18 minutes, we just pump through 725 and this contract can be in the money. And if I don't take it right now, then I won't get it at all. So my risk right here is that we hold the 9 EMA on the 15-minute chart purely. Not the 5, not the 1, only the 15. So I'll pull up the 15-minute chart right here even, because that's what I'm really looking at. 15-minute chart is the key here. And I would put the 9 EMA, but I'm not too worried. I can see it on my other chart. I have a couple screens. So here we go, we're long. We want the contract to go in the money over 725. That's all we want. If it breaks the 9 EMA on the 15-minute chart, then it's basically a loss at that point, and that's fine. Totally fine with that. I like the setup though. 35 cents off of that 725 here. Getting a wick on the 15 off of the 9. Very bullish. I'll zoom into the 5. Let's see if we can put in a couple candles closing higher. The only issue is just that slight rejection at 725, just one 5-minute candle that closed at the low, but we still are holding up the 9 and 21 on the 5. We just need a little bit of momentum here in the last 15 minutes to push us above 725. Given that QQQ is plenty above the all-time high, it's a little bit weaker in terms of the 9 EMA. It's definitely like kind of breaking the 9 EMA on the Qs here at this moment, but so that's not really the best, but we're still holding up, and the SPY has a little bit more of an opportunity to catch up in some sense here. Up 0.94% on SPY. The QQQ is up 1.37%, so that has diverged since when I posted, when the Nasdaq was up 1.4, Qs and SPY was up 0.88. So maybe this is the SPY catching up slightly, but only if it was to break the 725 and go higher here. We'll see. We'll see what happens. Look for some bullish momentum to come in into the close here. Would be nice to see, to continue and finish this day out on perfect trend with no breaks, no faults, just a straight trend all the way through. Beautiful day. We need to get above 725 here on SPY, and then the trade can work. It's at break even. Don't fight the trend. Bro, the White House posted a picture of Jerome Powell yesterday, or Trump and the White House posted a picture of Jerome Powell in a dumpster yesterday. The hell, man, that's so messed up. These aren't economics guys. They don't really know the difference. That's crazy. All right, well, the momentum's not really coming in here. No certainty. Looking slightly weak, honestly. Qs is losing 682. Not looking so good. It is what it is. If I take the loss here, I'm not really worried about it. I wanted to take the trade. Well, 13 minutes till close, and we're not getting any bullish momentum right now, but it can still happen. But I'm still looking at SPY holding that 9 EMA on the 15. We're still good. It kind of aligns with the 21 on the 5. So QQQ right under 682. It's below the 21 and the 9 on the 15 on the 5. It's right at the 9 on the 15. So this is a spot where we can get a bounce, or if it does sell off, then that's the first real sell off of the day in terms of breaking those EMAs on the 15. So that would suck, and that would invalidate the trade. But if we can hold here and go higher into the close, and this can be a good trade, but just let it happen. Oop, there's a red candle. Yep, still over there. These candles are kind of empty right here. A couple hollow candles for 30 minutes straight during power hours so far. Oh. Our contract's down 40% right here. And we're kind of testing that, almost testing the 9 EMA now on the 50-minute chart on SPY, which is not great, but yeah, there we go. It's cooked. Oh no. Well, that's it. Contract's cooked down to the stop. Down to the stop, 10 cents. So I'm gonna have to stop out. Okay, stopped out at 10 cents. Took a $19 loss on the contract. 29 entry to 10 cents stop loss. There's nothing I can do. Take the loss. My account is now down at $90.97. And we broke the 15-minute 9 EMA on SPY for the very first time today as I took the trade, trying to go long into the last 20 minutes. There's a 10-minute rigged, and it's cooked. It's unfortunate, but it is what it is. Can't make that up, can you? That's the reality. That's what trading looks like 90% of the time. It doesn't mean I'm going to lose, though. I still lost $19, but tomorrow, we'll see. It's definitely annoying because we're just breaking that structure right now in this specific candle. But, yep, that's how it goes. Yep, that's unfortunate. Okay. Just took a loss. So instead of my account being up 78%, now it's only up 45%. So well, I felt risky. I took the trade, aligned with the trend. The trend broke the moment after I took the trade. Can't make it up. It happens all the time. There's nothing you can do about it but stop out. So try again tomorrow. It is what it is. That's how the day goes, and that's really sucks. Like, genuinely, that's really not very cool, but that's the reality of the market. You'll go long, the trend will never break, and then it'll break right after you go long. That's what happens. So hope that I don't have to take another stop tomorrow, because then my account's really starting to get crushed. And the whole point is to take 5 trades and have one or two of them present enough outsized return to where it negates the rest of them. So this is one of those rest of them. So this trade won't matter when I take a trade that goes 100 or 200% tomorrow or the next day, and it won't matter. What will matter is that I did take the stop loss. What will matter is that I did follow my plan. What will matter is that even though I had some idea, I thought it would work and it was reasonable, we did break exactly what I didn't want us to break, and so I took the stop. I lost $19. My account's down to $90.97 from $111.29, including commissions. So it is what it is. Ken Griffin saying a prolonged Hormuz closure will spark a global recession. Well, to each his own. So yeah, that definitely sucks, but it is what it is. That's the thing about trading during power hour is it's very unpredictable. It makes me want to trade earlier, but I also don't want to trade earlier because then I have to trade out the money, and I just really don't like doing that. It's just something about being 2, 3 strikes out the money, and just I don't know. I've done it for a lot, and I don't like it. I prefer to just wait until the strike is closer and have a decent opportunity to run it in the money rather than just capitalizing on a little bit of price movement, which is really what I'm trying to do. So the goal isn't to go in the money all the time. It's really to just capitalize on the movement. So there it is, take a loss while the market's really selling off here down to the VWAP. I mean, I would have never thought that was going to happen until I took a long trade, and it happens to break right after. So there we go. That's what it looks like to take a loss, stop out where you said you're going to stop out, and move forward. It sucks, but there's nothing you can do. The account's down like 20% today. All right. 725 call from 29 cents to 10 cents. Right at the 10-minute rigged. Just got cooked. It feels like it's the same thing that happened on Friday, right? I mean, isn't that what happened on Friday? Well, we were in a downtrend on Friday, and then kind of in a downtrend, and then we broke lower going into the close, which this was the trade on Friday, which is this red candle at the close, which looks exactly like this candle at the close today. So it just feels like the same thing as Friday, except on Friday I shorted and made $9, missed 100%. Today I went long here and got wrecked and took the stop loss at 10 cents. I don't know why the market's selling off like this right now. I have no idea. I mean, we just lost 0.3%, and on the Qs we lost 0.2%. Not sure what caused that. I don't know what's happening tomorrow, or if there's any, I don't really know. Market just decided the trend isn't your friend today, I guess. At least not for me in my timing. Yay, the trend broke after I went long. Right. 2 minutes till the close. Yeah, it would have been much easier to just watch that 15-minute and 5-minute 21 break and then just go short into the close again, like Friday. Would have been actually perfect, but looking at the chart, I just can't say that I want the trend to break at the last 10 minutes of the day, and I can't expect that. And I'm not going to trade that. So I got screwed on the call. Well, it's almost like a reminder that I almost only want to get on for power hour only on days when we're consolidating for the majority of the day going into power hour. Because if we're just rallying into the power hour or we're just um, downtrending into the power hour like on Friday, then it becomes more unpredictable because, well, it seems like, I don't know, like we just trend the whole day until the last 20 minutes and then we just break the trend and then we're going to gap down probably. I don't know. I'm not really sure why that has to happen or be that way, but it seems like that's just like consistent. So it's like there's only very few days where during power hour there's actually a good trade that presents an outsized return, and those are the only days that I care about. And if I can't be there for those days, then I don't know how I'm gonna profit. Don't know how the probabilities can be on my side if there's no move, or if the move just breaks the trend that has been happening for 8 hours and it just breaks after I go long. I just don't know how consistent that's gonna be. I hope not very much, but we made a new all-time high by like 4 cents, and then yeah, gave back half the day's returns in 10 minutes. There's the close. Okay, that's it. The market is closed. I'm gonna come back tomorrow and try again. It is what it is. So took a loss. I gotta go right about it now. Then the account is down to $90.97, which honestly I don't like that. But hey, I can still trade three, four more trades maybe. So let's just hope that one of them actually does something that's decent. So have a great rest of the day.